Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. In the U.S. session, there was a bit more optimism over those Fed rate cuts, enough to send the NASDAQ composite to a record high. The equity market is hoping Fed easing may prevent a recession and in turn support corporate profits. Meantime, we saw a little bit of weakness in the yen during New York trading, given the political uncertainty in Japan. In a moment, we'll get some reaction to the resignation of Prime Minister Shigeru Ishiba. I'll be joined by Bloomberg opinion columnist Reidy. But we begin with market action and the views of Carol Schleif. She is Chief Market Strategist at BMO Private Wealth. Carol is on the line from Minneapolis. Thank you so much for making time to chat with me. Can we begin with the August price data? We'll get CPI, PPI this week. And from what I'm reading, there is a risk that these numbers kind of indicate that the progress on fighting inflation has stalled. Is that your view? Is there a risk that we get sticky inflation readings?
Yeah, we wouldn't expect to see a continued softening because you're going to have the death by 1,000 cuts of tariff bleed into, particularly into CPI, but definitely you'll see hints here and there in PPI. So it's tough to imagine it going down. On the other hand, we don't think the Fed is going to be looking at as hard at that side of the dual mandate as they will at the employment side. And so I think unless it's wildly out of whack, I would expect that markets are going to look beyond the CPI and PPI and focus more on the employment numbers, and we get additional revisions in the non-farm payrolls tomorrow morning. Yeah.
So what's the risk then that we get maybe a 50 basis point rate cut?
Well, hopefully if we do, that's not our base case, but if you did see some really substantial revisions and the Fed erred to do what they did basically a year ago and surprised with the 50 basis point, hopefully the communication around it is such that this is a preemptive stabilization move, because it's important to remember that all these revisions and all these numbers are backward looking, and it doesn't change at all the fact that the economy still held in really tight. Inflation isn't as low as they want, but it's substantially lower than it was a couple of years ago. So basically the economy's in good shape. There's a lot of reason to be optimistic going forward. If the 50 basis point cut came and it wasn't surrounded by that, it was surrounded by commentary about a weakening economy, that would fret the bond market and probably fret the stock market too.
So you mentioned the dual mandate a moment ago. Would you kind of assess the economy right now to be pretty balanced in terms of trying to find equilibrium here?
Yeah, I think Chair Powell's choice of language at the Jackson Hole Summit was spot on with saying he called it a curious balance. And I think he was, as you dove through some of that commentary and listened, he was really trying to preface for the fact that, that not only the supply of labor has come down, but demand for labor has come down too. So that's kept it in that really delicate balance. And there is a lot of argument to be made that as we try to reorient this economy, particularly bring manufacturing back here, and don't have the right kind of domestic workers to do it. So we need to rethink some of the immigration things, that as we're trying to retrofit the economy. And there are some pretty pro-growth, business-friendly aspects to the One Big Beautiful Bill, that you could actually see some firming demand for labor in the back half of the year. The key for us to watch will be, you don't want that demand to soften further. You want it to be stable to up.
To what extent can we point to tariff policy as being kind of one of the culprits here in creating a bit of the weakness that you just described?
I think it was responsible for creating some of the weakness early in the year, but I do feel like businesses, particularly because we're still, when we had the numbers last week, they were August numbers we were looking at, which August is notoriously weak in any year. But I think we're starting to get some clarity. We've got some of the sectoral tariffs are in, and those aren't going away. You've had some amelioration on some of them, the 15% with Japanese. We're still in negotiation with Canada and Mexico. And so businesses have enough framework to be able to make some decisions and step forward. And more importantly, we hear anecdotally a lot of really positive comments around the immediate expensing of R&D and manufacturing. And even in the small and medium-sized businesses, we're hearing hints in seeing hints from some of the commercial banking partners that we have that are saying stuff that was sidelined in the spring is starting to move forward.
So you know well that September's can be a very tricky month for the equity market. I was looking at some Bloomberg data going back as far as 1971. The S&P 500 has dropped about 1% on average. Is there a risk that we could get maybe a modest pullback, perhaps something greater than 1%?
We wrote a piece just last week called Spooky Season, where we dove into some of that, and particularly for our clients where there would be taxes involved to wanting to sidestep. If there's pullbacks or volatility in here, we would expect any cash on the sidelines to want to figure out a way in. And it seems like traders overall have decided they pretty much like the smell of pumpkin spice this fall, because after the hiccup we had last Monday, we've had some pretty reasonably good markets with, as you pointed out, the NASDAQ hitting a new high today.
Let's talk about opportunities offshore, particularly in Asia. Are you finding any these days?
Yeah, we've had a China play on for quite some time, if you will, more as a secular thematic play, just because they are trying hard to rearrange that economy. We're watching closely what's going on in the other developed markets. We actually had pulled back. We had a secular play as well for a couple of years on Japan, and had pulled back from that, just going into a lot of what's been going on, especially with the longer bond yields there and the inflation, the sticky inflation they're having. And you've got a lot of folks in that country who haven't, from a generational standpoint, they haven't lived through inflation like the rest of us have for a very long period of time. And then we are watching European markets closely, because there's interesting things in terms of the hard pivot they're making for increasing defense spending, increasing infrastructure spending. But the key will be, can you get 27 or 28 countries all in the same lane doing the same thing to enhance their markets and things like that? So our modest overweight to equity still remains concentrated in the United States.
Carol, before I let you go, last question. When it comes to a lot of the policy changes that we have seen in Washington, and on top of that, problems with the notion of Fed independence, maybe changes at the Federal Trade Commission that are likely or not, we don't know yet. How are you feeling about the way in which the administration is guiding some of the policies that can impact the economy and markets as well?
The interesting thing is we've been writing about this all year, parsing it out for clients, that the equity markets really like policies that boost growth or pay attention to growth. And there's a lot to like in some of the bills and stuff that are favorable for removing regulation, not removing it, but loosening it. Secretary Besson has talked repeatedly about loosening the corset on the financial services industry. And I can attest firsthand to all the compliance overload that goes on in our industry and has for the last decade or two. But that said, the fixed income markets and the economy broadly do not like threats to Fed independence. And there's numerous examples of countries through time where when fiscal policy bleeds into monetary policy and there's too much oversight from the politicians, you end up with higher inflation over the long run. So it's critical that the Fed maintain independence. And we are pretty confident that the bond vigilantes will express ire, if you will, and angst over. They've hinted at it a few times, particularly with some of the auctions for longer term, but they've been very orderly and very patient and very watchful. But if things really went quickly down a path to really look like the Fed's independence was severely crimped, we suspect that the vigilantes would be very vocal.
Okay, Carol, thank you so much. We'll leave it there. Carol Schleif is a chief market strategist at BMO Private Wealth, joining us from Minneapolis here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. We turn next to the political instability in Japan. It was over the weekend that Prime Minister Shigeru Ishiba announced his intention to resign.
While I feel there are still things I wish to do as premier, I have made the difficult decision to step down. But I felt that if I continued amid a vote on an early leadership race, it could have created an irreversible division within the party, which is certainly not my intention.
Japanese Prime Minister Shigeru Ishiba speaking there through a translator. Now, his exit follows back-to-back election losses that cost the LDP its parliamentary majority. Now, make no mistake, Ishiba's successor will have to navigate a number of challenges, from global trade to simmering resentment at home over higher inflation. In his latest column, Bloomberg opinion columnist Reidy writes that Japan deserves far better leadership than this. And I am pleased to say that Gearoid joins us now from the Japanese capital. Thank you so much for making time, sir, to chat with me. I think it's fair to say this was an unsurprising move. So, Gearoid, help me understand why Ishiba was almost destined not to succeed in this.
Yeah, I mean, I think the only thing that was surprising about it was how long it took. It's 7 or 8 weeks since the upper house election defeat. That, as you say, is the second major defeat, indeed the third major defeat that Ishiba had as LDP leader, in addition to the lower house defeat last year and the Tokyo Assembly election earlier this year. As you say, Ishiba was brought in to fix a problem, and the problem was the LDP's declining popularity. That was under the previous Prime Minister, Fumio Kishida. Ishiba was brought in as a new face, a new lick of paint on the party. He wasn't tainted by any of the scandals, nor should I say actually was Kishida, but Kishida was the one who was sort of like handling them, so he kind of became associated with them. Ishiba was quite scandal-free, clean politician, believed to be popular, but when he came in, he did not see the actual bounce in approval ratings that we would associate with a new leader coming in. And ultimately, the LDP is a large organization, and what they are there to do is to win elections, and what the leader is there to do is to win elections. Ishiba proved that he couldn't do that, and as I say, the only surprising thing is that he didn't go earlier. He dragged it out a little bit longer than, frankly, I think it needed to.
So did Ishiba alienate any part of the LDP in particular?
Absolutely. The LDP, I think listeners should understand, the LDP is a very broad party that include, it is a center-right, for the most part, party, but it also includes, people way over to the right wing, and even, politicians that I think in the West might be considered rather left wing. It is really the only viable party at the moment that can really take power over the last couple of years in Japan. And so that tends to bring in a lot of people from many different political leanings. What, for example, the late Shinzo Abe did very well was to unite those different wings within the party to make sure everybody got a little bit of everything. Everybody was kept happy. But when Ishiba came in, one of the things that he immediately did was to alienate the right wing of the party, and in particular the former Abe faction, the lawmakers who were part of a lot of the factions were dissolved over the last couple of years because of one of the funding scandals that I mentioned. But obviously those lawmakers are still there. He really alienated a lot of those lawmakers, and he also alienated the former Prime Minister and former Finance Minister, Taro Aso, gave him a very sort of invented post within the party that carried no power. And his base was not solid enough to be able to do that and to be able to take on such vested interests within the party. What he really needed to do was to unite the party and make sure that everybody was getting a little bit of, a little bit of what they wanted, and a little bit of, various cabinet posts and cabinet ministries and stuff like that, not to alienate people. And then, of course, what happens is when he alienated those politicians, he also alienated the voters particularly right-leaning voters saw him as very liberal, very left-leaning, and certainly not an inheritor of the party that it was, as it was under, for example, Shinzo Abe.
So maybe you can help me understand some of the economic issues that Japan is dealing with right now. I think of very high inflation, the strongest that we have seen in maybe 3 decades, and at the same time, a little bit of concern over immigration policy. Unpack that a little bit for me.
Yeah, those are certainly two of the topics that I think will continue to dominate the elections have dominated the elections over the last year, and will continue to be an issue, particularly this year with inflation. There was a huge surge in the price of rice, which obviously is the staple here in Japan, matters a lot for people just trying to put food on tables. Inflation is it is at a sort of like a historic high in Japan. I should say that it's not as high, and it's never been anywhere near as high as it was in, for example, the US and many places in the US in the West. But you're coming from a country where deflation has been the problem over the last 2-3 decades. There's an entire generation who've grown up who aren't familiar. It's the first time that they've seen prices rise. And now it has been entrenched over the last couple of years. It's become quite sticky within the economy, and that's creating issues where in a situation where wages are rising, but they're not rising enough yet to overcome inflation. So that's one issue. And then also there is the issue of immigration. Again, I don't want to overstate it. I think it is a little bit overstated in some analyses. What you saw in the upper house election was a lot of voters deserting the LDP for this upstart right-wing party called Sanseito. I think that has a lot more to do with the unpopularity of the LDP rather than Sanseito's policies towards immigration, and they could be described as it would be fair to describe them as an anti-immigration party, and they have some rather unpleasant language around foreigners. I think that is a little bit overstated. Having said that, Japanese society is changing rather quickly. There has been a large increase in the number of particularly foreign workers over the last decade, and there hasn't really been an honest conversation about what people want the country to look like.
Maybe you can help me understand the possible successors to Ishiba. Are there any obvious candidates?
The two leading candidates at the moment, I should say it's very early in the day. We had, if memory serves, 9 candidates last year in the race that eventually was won by Ishiba. The two leading candidates would be the people who came second and third in that election last year. That's Sanae Takaichi and Shinjiro Koizumi. Takaichi first, if she became the leader and then was elected prime minister, it's quite likely, but no longer guaranteed because the LDP is no longer the largest party in the lower house. She would become the first female prime minister in Japan. She is a self-declared heir of Shinzo Abe and his politics and his Abenomics policies. She is, we should say, she's definitely very popular with the right wing, and especially with people who did not like Ishiba. They really represent two poles on either side of the party. So she's definitely a leading candidate. I would say she finished second in the runoff election against Ishiba last year. And what you saw was basically concern that she might have rather similar flaws to what Ishiba turned out to have, in that she only appeals maybe to one section of the party, and that in her case is the right wing. The other candidate, as I mentioned, is Shinjiro Koizumi. He's the son of the former Prime Minister Junichiro Koizumi, who listeners might remember was Prime Minister in the early to mid 2000s, while George W. Bush was the president in the US. He's very young, he's a little inexperienced, but he has had quite an impressive year. He came in as agriculture minister early on this year to deal with the rice prices that I mentioned earlier, and very immediately and effectively was able to to generate a downturn in rice prices by changing how the country was releasing its reserves of rice. That will have certainly won him some plaudits. He's believed to be quite popular with the public. He's very, he's young, he's good looking, he's charismatic. He has a celebrity wife and a young family. So he has a lot of things going for him. Those would be the two leading candidates, I think, at the moment.
All right, Gearoid, we'll leave it there. Thank you so much for filling us in, offering some perspective on the way forward now that Japanese Prime Minister Shigeru Ishiba has resigned. That is Bloomberg opinion columnist Gearoid Reidy, joining us here on the Daybreak Asia podcast. Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.